When you think of Dubai, right, you picture these incredible skyscrapers, gigantic malls, a city that just seems to defy the desert it's built on. But have you ever stopped to think about what's running behind the scenes? Well, today, we're going to pull back the curtain on the company that literally powers that vision, DEWA.
So, who is taking on this absolutely massive job? The answer is the Dubai Electricity and Water Authority. You know it as DEWA. And honestly, to understand how DEWA works is to understand a key piece of how Dubai itself works. It all starts with a really unique business model.
Okay, let's break this down. Vertically integrated monopoly. Sounds a bit like textbook jargon, but the idea is actually super simple. Imagine one company, just one, that does everything. It makes all the power, it produces all the fresh water, it owns all the poles and pipes to send it across the city, and it handles the final delivery to every single apartment, villa, and office. That's DEWA. They control the whole shebang from A to Z.
So let's really get into the nuts and bolts of what this essential utility does and why it's so central to Dubai's entire game plan.
I mean, the scale here is just mind-boggling. DWA is the only provider for all of Dubai, period. They generate the power, they desalinate the seawater, and they run the entire grid. But this isn't just about keeping the lights on today. They are right at the heart of Dubai's massive clean energy strategy, leading the charge on enormous projects like the Mohammed bin Rashid Al Maktoum Solar Park. The goal? 100% clean energy by 2050. And because the government is the majority owner, you know DWA's goals are perfectly in sync with Dubai's future.
Now this kind of setup, yeah, it's definitely caught the attention of financial analysts. So let's dive into the bull case. The core reasons they're telling investors this is a stock to buy. And it all starts with some seriously big numbers.
First off, just look at the scale. We're talking about a company valued at around 120 billion dirhams. That doesn't just make it a big company, it makes DEWA one of the absolute largest listed utilities in the entire region. It really shows you just how fundamental this company is to the whole economy.
And that massive valuation, it's being fed by a customer base that just keeps growing and growing. Over 1.29 million accounts, and that number is ticking up by 4 to 5% every single year. Think about it. Every new tower that goes up, every new family that moves in, they all plug directly into DEWA.
For a lot of investors, though, this is the number that really seals the deal, the dividend. We're looking at a projected yield of about 5.5%. In a world where predictable income is king, getting that kind of consistent payout, backed by the rock-solid cash flows of a utility monopoly, well, that's a huge, huge draw.
Okay, so if we boil all that down, you get 4 main reasons to be bullish. Number 1, that monopoly power. It makes their earnings incredibly predictable. 2, demand is just locked in. As Dubai grows, DEWA grows. 3, their big push into renewables isn't just for show. It actually lowers their fuel costs and makes them more efficient. And finally, number 4, that juicy dividend isn't just a vague promise, it's backed by a clear policy to pay out at least 6.2 billion dirhams every year. But hey, a good analysis isn't all sunshine and rainbows. No investment is a sure thing, right? So we have to flip the coin over and look at the potential challenges, the risks that analysts are keeping a very close eye on. All right, risk number 1, the regulators. What if the government suddenly changes the rules and tells DEWA they can't charge as much? It's a valid concern, but the counterargument here is history. The regulatory system in Dubai has been incredibly stable and practical, and it includes mechanisms that let DEWA pass on its costs, which helps protect its profits. Okay, next up, execution risk. DEWA is building some of the biggest energy projects on the planet. What if they run late or go way over budget? Well, the way they handle this is actually pretty smart. They use something called an IPP model, which basically means they partner with other expert companies to build and run these plants. This shares the financial risk and leverages their already stellar track record of getting things done. So what about things DOE just can't control? Like what if natural gas prices spike or interest rates go through the roof? That could definitely hurt the bottom line. But they have a financial toolkit for that. They use hedging, which is kind of like locking in the price of your fuel a year in advance, so there are no nasty surprises. They also have long-term contracts and a great credit rating, which helps keep their borrowing costs low. And the last big one, they've got all their eggs in one basket, and that basket is Dubai. So if Dubai's economy stumbles, so does DEWA. But here's the thing analysts point to. That basket is pretty darn strong, with a great economic outlook. And more importantly, DEWA is so critical to Dubai's success that their fates are completely intertwined.
So we've laid out the powerful case for buying.
And we've looked at the potential headwinds. So, what's the final verdict? Let's bring it all together for the analyst's official recommendation.
Putting DEWA side by side with its neighbors is really telling. Look at that profitability. That EBITDA margin, which is a great way to measure core profit, is sitting at around 51%. That's way ahead of a company like TAQA. While others might be more diversified or specialized, DEWA gives you that pure, direct investment into Dubai's essential services, all with a super clear dividend policy.
And here it is, the bottom line from the analysis. A clear buy recommendation. The target price suggests the stock itself could go up about 12%. But then, you add that sweet 5.5% dividend on top, and you're looking at a potential total return of around 17% per year. Not bad at all.
So if we had to shrink this entire explainer down to a single sentence, this is it. Investing in DWA is seen as a way to tap into the fundamental growth of Dubai, but you're doing it through a safe, stable, high-quality utility company.
And that kind of leaves us with one final thought to chew on. In a world that feels so volatile and uncertain, is there maybe something beautiful in a business that's just predictable? A business that's essential and that just quietly goes about its job of powering the future 1 kilowatt at a time? For some investors, the answer to that is a resounding yes.